Hi guys, welcome back to my channel. This is your girl Dan Schmella. So today I will be giving you guys 5 stocks that I think are a good buy for the month of October. Since it's the beginning of the new month, I thought it would be a good opportunity for me to give some stock recommendations. Now, before we dive into the stock recommendations, I would like you to know that I am not a financial advisor. I'm just sharing my journey on this platform and what I've learned and what I know. And hopefully, this will be helpful to you. Again, do not forget to always do your due diligence. Now that this disclaimer is out of the way, let's go ahead and get right into today's video. So the first stock I have for you guys is Pinterest. Pinterest is a social media stock company, and you may have heard of it with the likes of Facebook, Instagram, WhatsApp, and all the like. Looking at the 1 year chart of Pinterest, we see that the company had a massive sell-off right after the last earnings report. And that was mostly due to the fact that the company advised investors that there was going to be a slowdown or a difficulty in the retention of monthly active users on its platform. And so because of that, a lot of investors decided to sell the stock, seeing as there was going to be a slowdown in customer retention. Pinterest is currently down over 25% compared to its share price dating back to last earnings report. But the reason why it's on my radar is because looking at its market cap, it has a market cap of $33.5 billion, a PE ratio of 206, and earnings per share of 0.25. Right now, Pinterest is currently trading at $51.8. It's had a 52-week low of 42.67 and a 52-week high of $89.9. So almost $90 actually. Going back to the 1 year chart of Pinterest, we see that before every earnings report, there is a run in the stock. And after the earnings report, the stock actually corrects itself. Now, I'm expecting the same thing to happen again this time around. I think it's set to report earnings on October 17th. Right now would be a good time to get into the stock if you're trying to take advantage of that momentum. Aside from that, looking at the valuation measures of Pinterest, we see that it has a price per book ratio of 12.87, a profit margin of 7.18, and a return on equity of 7.3. Total revenue made in the last 12 months is sitting at $2.25 billion and a total cash at $2.14 billion. It also has a current ratio of 11.2. So I also like to go ahead and find out what other analysts think of a stock that I'm actually interested in and I actually want to buy. And looking at analyst rating between 1 to 5, where 1 being a strong buy and 5 being a sell, we see that Pinterest is actually sitting at a 2.5, which is actually a good buy. Most analysts are rating its target price at $71, and it's currently sitting at a high of $51, which actually gives us a huge opportunity for growth right here. And it's definitely one of the reasons why I have Pinterest. Now, Pinterest is definitely one of my favorite stocks that I was blessed enough to get into last year, and definitely is looking into buying some more, and that's why I'm adding it on my list and sharing it with you guys. And but aside from that, remember I had mentioned the fact that it had a huge sell-off during its last earnings report because of the guidance that the company gave that they probably would not be able to retain the amount of active monthly users on its platform. Now, because it has a great management team, the company has been making some big moves this quarter to be able to deal with this problem. The company is forecasting its growth in Latin America and has worked a lot to expand its reach to increase its active monthly users, especially in the Latin America and also worldwide. The company has also hired a new country manager in Japan, which actually was a former employee at Amazon. And the deal behind this is to help the company grow in Japan, but also increase its ad sales. According to a recent survey done by Nielsen, the platform has been visited by 14.5 unique consumers who have been there for the sole purpose of shopping. It has also retained 82% of its monthly active users who are there to buy products from the company. Now, because Pinterest has seen the opportunity for e-commerce on its platform, it has introduced a new feature called Slideshow for Collection, which facilitates the ability to buy and sell products on Pinterest. Now, with all these things, Pinterest has definitely been working hard to solve its issue of retaining its monthly active users and also provided itself with the ability to acquire new customers. And it has also worked to facilitate e-commerce on its platform for buying and selling of the different products. So for these reasons, I personally believe that Pinterest is definitely going to grow from here and even grow past its all-time high. Before I go on talking about the next stock, it would really mean a lot to me if you would subscribe to my channel and also give this video a thumbs up. That's a way for you to support me, and I am really appreciative of all the support I get. Thank you. The next stock I have for you guys is the Trade Desk. Now, the Trade Desk actually is also one of the stocks I was really blessed and fortunate to get into at the beginning of the stock market crash last year. And I still believe it's a good stock to buy into. And here are my reasons. Looking at the one-year chart of the company, we see that the company has been doing fairly well on its own. It had some correction back in March and a huge sell-off in May. There was also a stock split that happened in June, and the company recovered from its May sell-off. And it's up by 30% since hitting its all-time low. It has a 52-week range of 46.7 and a high of 97.2. It also has a market cap of $33.7 billion, a PE ratio of 132, which is definitely way overpriced, and an earnings per share of 0.53. Now, if you don't know what the Trade Desk is, the Trade Desk is actually a cloud-based advertising company where advertising company go and get data to better target their consumers. So think of it like they are sort of like the people responsible for you like going on Pretty Little Thing on for example, and looking at a couple of clothes, and then next thing you know, you are seeing Pretty Little Thing ads popping up on your Instagram or Facebook or on your YouTube channel. Actually, that's kind of like what the Trade Desk does. Let's take a look at its valuation measures. The Trade Desk has a PEG ratio of 10.18 and a price per book ratio of 26.91. It also has a profit margin of 25.4 and a return on equity of 26.88. Over the last 12 months, it has made a total of $1.04 billion in revenue and sits on a total cash of $705 million. It has a current ratio of 1.77. Again, since I like looking at what other people think of the stock, let's take a look at its analyst rating. Analysts are rating this stock as a 2.2 with an average target price of 86.37. Now, the stock is currently sitting at $70, which is roughly about a 20 to 22% increase. The stock is definitely a buy and is definitely one of my favorites. When I look at this stock, I see a huge opportunity for growth. The stock definitely thrived back in 2020 because of the pandemic and everybody being home, but I still see that there is going to be a huge opportunity for growth for this company long term. The next stock I have for you guys is Upwork. If you're familiar with Fiverr, you definitely will understand what Upwork is about. Upwork is a freelancing platform, just like Fiverr. Looking at the one-year chart of Upwork, we see that Upwork is up by 183%, which is actually a huge growth for the company. The company is up since its all-time low of 18.2 with an all-time high of 64.49, and I still believe that this company has room for growth. It is currently still sitting at $51.3 and it has a market cap of $6.5 billion. Now, unfortunately, it doesn't have a PE ratio, but it has an earning per share ratio of negative 0.21. Looking at its valuation measures, we see that it also has no PEG ratio. It has a price per book ratio of 19.36 and sits on a profit margin of negative 5.94%. It also has a return on equity of negative 9.05% and has made a revenue of $440.7 million over the last 12 months and sits on a total cash of $172 million. It also has a current ratio of 1.77, which is actually good. For although these numbers may be quite unsettling for most investors, I still see opportunity for growth in this stock. And looking at analysts are rating this stock at a 1.6, which is actually a strong buy, with an average target price of 66.5, whereas the stock is currently sitting at 51.6. I personally believe that the stock has the potential to exceed this average target price. But then again, it's just me and my personal humble opinion. Now, although some people have voiced concerns over this stock in the regards to the fact that it has a strong competitor, Fiverr, I still do believe that this stock has the opportunity to grow, and here's why. Yes, Fiverr is bigger in market cap, in size, in profit, in revenue, and in many other aspects, but Upwork still has room for growth and it's a lot cheaper than Fiverr. So think of it like this way. Fiverr is already right up here and Upwork is here, and Upwork has the opportunity to grow from here to here. I hope this gives you a better imagery. But then again, aside from that, there is also the fact that Upwork is growing to become more and more global. The company is actually in over 180 countries in the world, which definitely makes it more global than Fiverr. And that's another reason why I think there's room for growth for this company. The last company I have for you guys is GXO Logistics. GXO Logistics is a global contract-based logistic company that manages outsourced warehouses and supply chains in 27 countries. The company recently separated itself from its parent company, XPO Logistics, and became a company of its own back in July of this year, and IPO'd also around the same time. Looking at the 1-year chart of the company, we see that it opened at a low of $48 and it's currently sitting at $79. It has also had an all-time high of $89.3. Now, the company also has a market cap of $9.165 billion and a PE ratio of 129.16. Let's take a look at its valuation measures. It has a PEG of 2.31 and a price per book ratio of 3.13. It also sits on a profit margin of 1.01 and no return on equity. It has amassed a total of $7.05 billion since its formation and sits on a total cash of $326 million. It also has a current ratio of 0.98, and analysts are rating this stock at a 2.1, which is definitely a good buy, with an average target price of 87.91, whereas the stock currently sits at 79.95. So definitely this stock is a good stock to buy. And the reason why I'm actually recommending this is because companies like Nike and Sherwin-Williams have reported shortages in their products due to supply problems. These supply problems come from delay at ports, shutdown of factories due to the pandemic, higher prices, and shortage of labor. Now, all these problems could be solved by GXO Logistics. GXO Logistics is a company that has grown massively due to the boom of e-commerce. It is currently the world's largest and biggest contract-based logistic company, and it owns over 1,000 warehouses, where it enables its customers to expedite shipping, process returns, and also increase efficiency via automation. On the flip side of this, the company is yet to report earnings of its own as a standalone company since it recently separated itself from its parent company, XPO Logistics. However, analysts are targeting a 10% growth in revenue, as well as some acquisitions along the way to consolidate its leadership in the industry. I personally believe that this company is going to do well, especially in this thriving e-commerce business. And the fact that it has well established itself in the logistic area, this company is definitely a good buy. That's it for today. Thank you guys for watching. Let me know down in the comment section if you're going to be purchasing any stock whatsoever. Please do not forget to like, comment, and subscribe. Tell a friend to tell a friend. And remember, let's all grow and make gains together.